Hey everybody. Well, the past 2 days have been brutal to the bears and bountiful for the bulls. There, how's that for your on-the-spot alliteration? I see that I'm recording this just moments after the closing bell. I see that the ES is basically clinging to the Fibonacci. It's a teeny bit above it right now. The Fibonacci itself is 3802. And as I'm staring at the screen here, ES is at 3805, so we'll just call it even. It's at Fib right now. But instead of showing the futures chart, so I just use good old slope charts this time. Do a little catching up. Okay, let's start with the basics. By definition, at some point, there will be an end to this bear market, like an end with a capital E, like a multi-year end. It is my opinion that we have not seen that end. It's further my opinion that we're a long way from that end. It's also my opinion that these counter trend bounces are a pain in the neck, or any other body part you want to name, because the bear market began here, and how nice it would be if it just slid down steadily, but instead we get this herky jerky up and down herky, and just have to, it's maddening. And the unfortunate thing is that as committed a bear as I am, even I back off, because the thing is that when we closed on Friday, it was like, God, money's going to be incredible. It could be a crash, because we were just poised for collapse, and it did exactly the opposite. We did start to fall more on Sunday night just to tease us, but that was it, Jack. And so Monday and Tuesday in particular, explosive days, triple digits up on the ES, hundreds and hundreds of points on the NQ, about 2,000 points on the Dow. It has been a snapback writ large. And of course, the question is always like, when's this damn thing going to end? And that really varies because, we all remember this horrible 2-month, it felt like about 50 years, this 2-month counter trend rally. And we also remember, things like this, which lasted a day, because we got this wonderful drop. And it's like, oh God, we're going up. Well, that didn't last, did it? So it turned right around. So I never know how long these damn things are going to last. All I do know is that the big picture is change 0.00. I mean, everything about these long-term charts is exactly the same as it always was. And in a weird way, I actually feel a little more comfortable as the market rallies like this, because, we can dash off any of that oversold nonsense. But as I started to say like 2 minutes ago, even I back off, and I'm like at a full 34% cash now, which if we plunge anytime soon will make me very upset. But the thing is that, the scars of that June 15, August 15 thing run very deep. We've got the jobs report on Friday. We've got the CPI on, I think, Wednesday. Either or both of those could go the bull's way or our way. The CPI last time saved our skins. It stopped cold the counter trend rally, and we went plunging. It was the beginning of a glorious, glorious drop. Seems a little too easy for us to get another one, but who knows? Anyway, what I thought I would do, it's not just me talking this whole time. I thought I'd look at a few charts just to say a thing or two about them. I have not prepared the symbols in advance. And I haven't even chosen which symbols I'm going to show you. I'm just looking at my list here and going to kind of just pluck them out as we go along. This one, the EFA, shows a nice encapsulation of how strong the bounce has been and how the easy part's over. As we zoom in here, you can see that this was very, very quick, and it took almost no effort at all to undo all that damage. This is a different story. A lot of volume, a lot of activity, a lot of pissed off people who want to get out. So this is the easy bounce right there. And again, that's the EFA. Oil had a huge day because of OPEC, 2 days in a row, hugeness. And the next key level on USO here is 72.01. But this is all a matter of little versus big. On the little side, yes, we've been going up for a few days. On the big side, this channel is it's like 2 years long and it's busted. Plus, we're below this very nice topping pattern. So OPEC or no OPEC, it kind of doesn't matter. I think this chart is really screwed and tattooed at this point. And I would even say the same for XOP, the energy companies, because they've had a fantabulous 5 or 6 days. But this broken trend line matters way more than a few days of lift and yet another lower high. What else can we talk about? It kind of makes sense that we got some strength here because the cubes were getting near incredibly strong support. We had this trend line here, and we had this Fibonacci right here. And so we got within spitting distance of those on Friday, undid Friday on Monday, and undid Thursday and Wednesday, and then some, basically all of last week today. So it just went roaring higher by over 3%. But, I'd only planned to talk about ETFs, but I think Tesla is a good example of why, at the core, things haven't changed. Because this is a very nice chart here. On the surface, got a satanic 666 there for a moment on the gain, but this bounced up almost 3% today. There is so much bearish about this chart. This trend line is broken. And way more important than that, this Fibonacci has been breached. The closer we get to this gap here, the more appealing a short this becomes. But you can see here just how vulnerable this thing looks to a drop, because this fib was very strong. I mean, look at it. It burst above it, and multiple times it challenged it. That all changed yesterday, Monday, when it was like the only stock to fall. But I really think if you look at this big picture, coupled with the fact that, this is PE still of 88, it's quite prone, I would say. One other item I would add is that since it seems all assets basically have 1.0 correlation, whether you're talking about crypto or bonds or equities or precious metals, you can essentially look at anything for clues of exhaustion points. And here's GLD. It did have this gap right here, which it did push past. The next real test, and I would actually consider it a more important test, would be this high right here, because this has been simply another, on an intermediate term basis, lower high. Starting here, down we go, down, down, down. And then this is the most recent one. So I really think that this line defines a very important point of exhaustion, because we've got all this overhead supply right here. And of course, this is all driven, I think, by the US dollar also. But my point is that assets tend to be holding hands and all following each other, either up or down on any given day. I'm probably going to wrap it up. Let's do one last one. Let's do our old friend Iowa. No, you know what? Let's do this one instead. Let's show XLP. This is my only ETF position at all right now. I got into this fresh today. It was up today, although, like half as much as the likes of the cubes. The hard stop on this is this gap. But generally speaking, I think you can see the potential of this and why I'm so enthusiastic about it. So that'll be an important one to watch as well. But as I say, some mega economic data coming out on Friday, the jobs, and the next week is just going to be jam-packed with the kind of data the Fed loves to watch. And of course, Bear Force One launches pre-market on Monday, so that may add some gasoline to the fire. Well, that is it. I will see you later.